What is going on, everyone? Hope y'all are doing well, and in this video I'm going to share my thoughts on the Honest Company's earnings report and conference call. I talked about this company about a week ago, so I want to share some things to pay attention to for the rest of the year. But I don't want to waste your time, so let's go ahead and dive right in. Okay, so let's talk about price action. Honest hit an all-time low of $2.54 back on June 16th. But since then, the stock went on a crazy run, almost doubling in price. Now it has moved back some, but we are still significantly lower than where we were when the company first went public. In June of last year, this company was almost $20 a share. Right now, as of recording this video, Honest has a market cap of just under $400 million. But let's go ahead and talk about the actual numbers from Honest this past quarter. First, when we look at their revenues, they generated $78 million, which is a 5% revenue growth. Analysts expected them to lose 3%, so they destroyed those numbers. In the previous video, I estimated them to grow 3 to 5%, so they are on the higher side, which is nice to see. Now, honestly, I've heard a few people say that 5% is a complete joke, but there is a huge problem with this. When we consider the different sectors, some are moving faster than others. Now, if we saw Tesla grow only 5% with the EV sector growing at the pace that it is, that would be a completely different story. But for Honest, who creates effective and safe lifestyle products for families, this is not a sector that is growing as fast. With the supply chain issues that they have experienced, 5% is actually really good. But let's look at the growth for the different categories. When it comes to their diapers and wipes, which is their largest segment, revenue was up 9%. Now, they shared a 12-week tracked channel data that ended on June 12th, and here are the results. The overall category growth for diapers and wipes was 9 and 10% respectively. But when we look at the sales growth for Honest, they grew 12% for diapers and 20% for wipes. So they clearly are outpacing their competition when it comes to sales. Now, what's important is the kind of growth between Honest Company and their competitors. Most of the growth for Honest came predominantly from volume, but their competitors received most of their growth from pricing. When we look at skin and personal care, revenue did decline. Honestly, this was a concern for me because I do feel like over time, this could be a large segment for them. However, the reasons for the decline are extremely important. And I think that the most important one to note is that they were negatively impacted by key items being out of stock. Now, I do think that this will take some time for retailers to understand how frequent these items sell out, but I don't think that this will last long. However, if we remove this and their timing shift on their shampoo and body wash shipments, they would have grown double digits. I really think this shines a light on where this company can be once inflation slows, supply chain issues get resolved, and we get out of the current recessionary environment. Also, looking at the data that I mentioned earlier, the overall personal care category declined over the past 12 weeks, whereas Honest grew 15%. So clearly they are proving to show signs of growth despite what their revenue says. The next piece of the earnings that I wanted to look into was their EPS numbers. EPS stands for earnings per share, and there are a couple of metrics that I think we should look at to really understand how the company is doing as they move towards profitability. The first metric is gross margins, which decreased from 36% to 30%. Now, I think many of us can figure out that inflation has not helped the cost of goods, so that will have an effect on their margins. But the other thing to consider is that they did not raise prices as much to offset costs like these other companies. And this is important when we talk about competitive advantage. The other major companies had lower prices for a long time, but now we are starting to see Honest and their competitors have relatively similar pricing. This could be a huge factor for Honest gaining market share, which in my opinion for the short term is much more important than improving gross margins. Now, they are expecting to increase prices in some of their products in the second half of the year, but until then, they will appear to have a competitively priced product. Now, their most recent price increase in June did not help gross margins to its full capacity because it happened late in the quarter. But I think Q4 in particular will be telling on how these price hikes will impact their gross margins. From their conference call, they're expecting Q3 to be another difficult quarter for costs. But when we talk about price increases, the management team said that they are not planning on doing second price increases on the same product, unlike their competition. Now, this is interesting because it helps us understand that the Honest Company is more focused on growth over profitability. The large companies like Procter & Gamble and Johnson & Johnson are going to focus on profitability. But for Honest, they want to continue to gain the market share that I mentioned earlier, so the more volume they sell, the better position I believe they will put themselves in down the road. But with all that said, it is important to note that because their costs have exceeded expectations, they are pushing back their positive EBITDA, or earnings before interest, interest, taxes, depreciation, and amortization to Q4 of this year. This, of course, was not what I really wanted to see. But as I said before, I'm more focused on them gaining market share. The Honest Company is the kind of brand that many people from this generation and the generations to come are going to be looking for. And with about a 5% household penetration, there is plenty of room for this company to run. Now, Honest has various products from diapers and wipes to skin and personal care to household and wellness. When I look at this company, I see tremendous potential to gain market share because of their generational focus. I see them being more focused with the current and upcoming generation who are having children than the other large companies. And the idea of clean lifestyle products could be trending for another decade, leading to greater gains in market share and significant improvements in their margins. Now, the company gave a statistic that I did not expect. 42% of all new births happen in the Southeast. One thing that we have seen is that many people are migrating to the Southeast. So to see that almost half of the new births are happening here means that it's not older people moving down, although we see this as well. But millennials and those that are wanting to raise a family are the ones that are moving down here. But what does this have to do with the Honest Company? Well, I'm glad you asked. When you consider the fact that in Q4, the Honest Company will begin the in-store partnership with Walmart, where they will sell their largest segment of products with their diapers and wipes collection, this could be a major source of revenue over time. Let me put it this way. Walmart has over 1,000 stores in the Southeast, and for people that shop at the same store, in this case Walmart, many of them have never been exposed to the Honest brand. So when you consider the fact that they are showing their presence in the most populated stores, especially when it comes to new families, plus pricing being in line with their competitors, there is no telling what this company could do for revenues in 2023. But before we move to the next thing, I think we can all agree that the stock market has been extremely volatile. And from what we saw in 2021, I do not want to put all my money into one brokerage. I've tried several different platforms, but one I really like to use is Moomoo. They're doing a promotion right now where you can get up to 7 free stocks when you deposit $100 to the platform, or 10 free stocks when you deposit $2,000 to the platform. And these stocks could be valued up to $2,000. Think about it. That's literally free money for you. As someone who has used multiple platforms, the Moomoo app is a really clean and easy app to use. You can buy stocks both on the US stock market and the Hong Kong market as well. Plus, there are no fees for trading US stocks if you are a US resident. And if you enjoy technical analysis, they have level 2 data as well. So if you're interested in using Moomoo, click the link down below in the description to get started. This promotion only lasts until the end of August, so make sure that you sign up before it ends. Okay, now the balance sheet. The company finished the quarter with $67 million in cash and cash equivalents and short-term investments with no debt, which is something they said in Q1 that they wanted to maintain. But another thing that is important to see is that they also have $37 million in accounts receivable, which means they have more money on the way. They currently have almost $260 million in total assets and under $100 million in total liabilities. Now let's talk about the significant news that came out for this company, because I think that this is another huge step in the right direction. First, the Honest Company launched in China a few weeks ago with Super Ordinary, which will help them with global expansion. And as I said in my previous video, I do not see this having a huge effect in 2022. But I think as the brand continues to grow, we could see strong international growth in the back half of 2023. But the largest piece of news that I took out of this conference call is their expansion into Publix and BJ's. Now, for those of you who live in the Southeast, you will know how popular Publix is. Where I'm at in Georgia, Publix is more known for middle to upper middle income earners, where they will be able to spend a little bit more for their products. And this is why I think Publix could be a surprise for many investors. Now, they are starting off with their skin and personal care products, but I think over time, as they grow their footprint in this store, Publix could be a solid contributor for their revenues. When it comes to BJ's, I honestly don't know what to expect, as it's not much of a retail presence in the areas that I've lived in. However, if you go to BJ's, I would love to hear your perspective in the comments down below. So with this earnings report and conference call, here's what I'm planning on doing. I believe that overall as a business, they've put themselves in a great position for double-digit revenue growth in the near future. And I think they have the potential to do this for all of 2023. In terms of profitability, I think that they can get there also in 2023. But if they need a little bit more time, I'm okay with it because of the growth that I'm expecting. Now, if we only see low single-digit growth with profitability being pushed back, then that will be a cause for concern. But I have continued to add to this one because accelerated growth and profitability are something that not only I like to see, but many large funds as well. I will keep adding as long as they remain under $5. In terms of price prediction, I can see this one around $10 to $15 a share over the next couple of years. But I'm really planning for this to happen at the end of 2024 as inflation dies down and they begin to increase their gross margins again. But I hope you all enjoyed this video, and if you did, hit that like button down below. It really means a lot for me and this channel. Plus, I would love to hear your thoughts on the honest company, so feel free to mention them also in the comments down below. Also, don't forget to sign up with Moomoo, where you can get up to 7 to 10 free stocks depending on how much you deposit to the platform. And if you're new here, hit that subscribe button and notification bell, that way you are notified when new content comes out. Hope you all enjoy the rest of your week, and I'll see you in the next one.